Brad Williams, Frugal Finance. Question here is pension plans. What's a pension plan? Is my IRA considered a pension plan? The quick answer is no. A pension plan is defined either as a defined contribution plan or a defined benefit plan. Both are formal structures that must follow the pension plan ERISA requirements. U.S. private industry pensions are subject to Employee Retirement Income Security Act of 74, which is administered by the Department of Labor. ERISA does not require employers to offer a pension plan, but sets minimum standards for those that have pension plans. The law generally does not specify how much money a participant must receive as a pension benefit. Required disclosures for pension plans. ERISA requires plan administrators, people who run plans, to give pension plan participants the most important facts about the plan. This information must be provided in writing, and some of it must be provided automatically. Other information is available on written request. These are formalized plans. Is a 401k an employee-sponsored ERISA plan? Kinda, yes. It's a formalized program that is run by the Human Resource Department, which is then, if it's large enough, they have their own plan administrators who monitor all of this stuff. And it is a very expensive, cumbersome format. Defined benefit, it's old school. That's extremely old school. And then defined contribution is more modern day. Most companies are ridding themselves of defined benefits because it's a set guaranteed income at retirement for life. And in the old days, that was reasonable. But today, not so much so. Defined contributions, a 401k. You read about a matching component of a 401k. That could be under the ERISA requirement. And whether it's a required or if it's a best effort on the part of the company, in terms of if you have a good year, the 401k plan is great in terms of matching. But on down years, the whole idea here behind retirement was to keep the costs low and the administrative side as simple as possible. So in terms of a defined contribution, they are complex and very cumbersome in terms of the human resource component. The idea behind all this is to make sure that the company is funding the pension accordingly. You can read day in and day out about companies that have underfunded pensions or overfunded pensions. You can read that in the quarterly and annual reports of a publicly traded company. One of the most important documents you're entitled to receive automatically when you become a participant in an ERISA-covered pension plan is the Summary Plan Description, or SPD. This is the document that you get on a monthly, quarterly basis that just collects dust. Yep, like a lot of other information, we're so bombarded with numbers and finance and what have you. If you don't remember the starting point of your plan and where it is today, well, take a minute and check it out. The SPD explains what the plan provides and how it operates. It describes how service time and benefits are calculated, when benefits become vested, when payments will be made and in what form, and how to file a claim for benefits. Pension plan administrators must inform plan participants of changes to the plan, either by providing them with a revised SPD or a separate document called a Summary of Material Modifications. In either case, materials are provided free of charge to plan participants. Each year, the plan administrator must automatically provide plan participants with a copy of the plan summary annual report free of charge. This summarizes the annual financial report that most pension plans must file with the Department of Labor on Government Form 5500, so on and so forth. Comment. Let me know. I know this stuff is as boring as reading one of these SPDs, but you, as a participant, need to be aware of what's going on in the background. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.